Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about 7 financial things you must do before 2026. Let's get into the video. 2026 is closer than most people realize, and financially it's a major turning point. Several tax rules created under the Tax Cuts and Job Acts are set to expire, potentially raising taxes for millions of Americans. Beyond that, inflation, rising interest rates, and economic uncertainty makes 25 and 26 crucial years to strengthen your financial foundation. If you want to stay ahead of the curve, protect your money and put yourself in the best financial position possible. I'm going to talk about the 7 financial moves you should make before 2026 arrives. The first thing is adjust your tax strategy for expiring tax cuts. Unless Congress acts, many TCGA provisions will sunset after December 2025. That means starting in 26, tax brackets are expected to rise. Standard deduction may shrink. The child tax credit may be reduced. Estate and gift tax exemption will be cut nearly in half. Some deductions may disappear. This gives you a very narrow window to take advantage of the current tax rules. What you can do before 2026. Maximize itemized deductions whilst the thresholds are favorable. Accelerate income into 25 if you expect higher taxes in 26. Consult a tax strategist to review your bracket and long-term plan. If you own a business, optimize deductions and entity structure now. Waiting until 26 could mean paying thousands more in taxes. The second thing is convert traditional RA funds into Roth IRA accounts. Rough conversions may be one of the most powerful financial moves you can make before 26. When tax rates rise, the cost of converting traditional retirement funds into Roth accounts also rises. Converting money before rates increase could save you significantly in future taxes. Why it matters now? Roth withdrawals are tax-free in retirement. Roth accounts have no requirement minimum distribution. Paying taxes now at lower rates could save you more later. The action step: run a partial Roth conversion analysis. Converting strategically without jumping into much higher tax bracket can create decades of tax-free growth. The third thing is review and update your estate plan. The exemption is dropping. One of the biggest TCGA changes in the estate tax exemption dropping from about 13 million to roughly 6 million per person in 26. That single change dramatically increases the number of people who may face estate taxes. What to do now? Review your will, trust, and beneficiary designations. Consider gifting strategies while the exemption is high. Evaluate family trust or irrevocable or irrevocable trust. If you own a business, plan for business successions. Even if you are not ultra wealthy, estate planning before 26 could protect your assets for your children and reduce unnecessary taxes. The fourth thing is pay down variable debt before interest rates shift again. High interest rates hit family hard, especially those with adjustable rate mortgages, credit cards, personal loans. business lines of credit. Although the Federal Reserve may pause or reduce rates, uncertainty remains. The best protection is minimizing debt that can increase unexpectedly. Before 26, focus on paying down high interest credit cards. Refinancing if you have an adjustable mortgage. Consolidating debt into a lower fixed rate loan. Building a plan to eliminate consumer debt. Your future self will be grateful you eliminate financial stress before economic changes take hold. The fifth thing is build a strong emergency fund, 12 to 24 months of expenses. The old advice of saving 3 to 6 months of expenses no longer matches to the economy. Uncertainty, job instability, and rising living costs make a larger safety net essential. If possible, aim for 12 months of expenses if you are a W 2 employee, 18 to 24 months if you are self employed or business owner. This financial buffer gives you freedom and peace of mind, and it protects you in times of recession or unexpected setbacks. How to build it? Set up automatic transfers, reduce unnecessary subscriptions or spending, use side hustle or bonus income to build the fund faster, keep funds in high yield saving accounts. By 2026, having this cushion could mean the difference between financial stress and stability. The sixth thing to do is strengthen your investment strategy before market conditions shift. The stock market will go through changes over the next few years as interest rates, taxes, and global conditions shifts. The goal isn't to predict the market, it's to prepare your strategy. By 2026, you should rebalance your investment portfolio, increase contributions to tax advantage accounts, diversify beyond traditional stocks, real estate, bonds, etc. Invest automatically regardless of market conditions. Review your risk tolerance. Bonus tip is this is also a perfect time to start or increase a taxable brokerage account for long-term wealth building. The seventh thing is create or revise your long-term financial plan. Finally, the most important move you can make before 26 is creating a clear financial plan. The world is changing fast. Inflation, taxes, economic policies, and technology will all reshape the financial landscape. Having a long term strategy keeps you grounded no matter what happens. A strong financial plan includes a retirement blueprint, a tax strategy, an investment plan, short and long term money goals, debt emulation strategies, insurance and risk management, legacy and estate planning. If you haven't updated your plan in the last 12 months, or if you have never created one, now is the perfect time. My final thoughts is the period between now and 2026 is one of the most important financial windows of the decade. Major tax rules will shift, estate limits will change, and the economy is uncertain. Taking actions before 26 can protect your wealth, reduce taxes, and put you in a stronger position. You do not have to overhaul your entire financial life overnight. Start with one action and then move to the next. Consistency is how you win. Thanks for watching this video and do not forget to subscribe to my channel.